Hey guys, it's Will here. I'm going to go through the markets and some sectors and to focus on, but as usual, if you've been watching my videos for a while now, you've probably seen that I've been talking about this downtrend we're in fairly early on, just using technical analysis. And within that downtrend, you get some little rallies. So in order to determine if you've got a reversal, one way you can do it is wait for a break of the downtrend with higher lows established. So if you look here, you have this downtrend line here. You would draw a line that, like shows the downtrend. You break it, and then you've got this higher low. So you got a low here, and then a secondary low. But in the more significant downtrend, like you can see here, we have this little downtrend through the 50 pullback, and then when it goes up here, it doesn't quite establish a new uptrend. And so we've got kind of a channel here. And so what you're looking for, like when you draw a line across the top, so here, you'd be looking for a break of the downtrend and with a higher low is established. So you can see here we get up, down. We don't really establish an uptrend with the break of downtrend. You can also look at weekly chart. You had a little blip here, a little rally here, but now we've established this trend. We kind of bounced off this 200-week moving average, so we'll have to see. You can see here we came up, but we didn't quite cross, and the moving average of the momentum is still downward. So you can, if you wanted to, you could try to see where you bounce off these the lower range. You have these little rallies off of the range here. But I'm looking for an established uptrend with more momentum, not just as short little things like this. And when you buy off of off the bottom of a range, there's no real established, like here, you've got the red dots, the momentum is downward most of the time. And so if you did buy down here, you would use a stop below the low of this candle here, or at the below this trend line. So like if you bought right here, it would go up, come back down. You would keep it as long as it didn't break that downtrend. But of course, if it keeps going down, the downtrend just keeps going down. So you just put this at where you buy at the recent low. So if you buy right up here, you would put the stop below this low here. But most of the charts look similar. You're in this down channel with these little waves. You got the 50-day down below the 200 and a downtrend as well. If you look at the weekly on the S&P, you had a sort of a bounce at the 200. We're in a rising rate environment, which isn't great for this stuff, but some people think that like the Fed, the markets have incorporated a lot of rate hikes anticipated already. So it's ahead of the game. It's forward looking, but if there's negative inflation, if there's like a bad inflation report, like a high inflation, or rates are raised, more than expected, that type of thing. And interestingly, if there's negative signs in the economy, even though that lowers growth, like earnings and things like that, and on the other hand, it could be a sign that the Fed might cut back on the rate hikes. So there's different camps in terms of what happens. So even with trading technical analysis, the problem during this point is high volatility with a lot of ups and downs. It's harder to to have an established trend. If we look at IWM, go back to daily, like a similar situation. Just it got these down channels. Dow Jones, similar situation. Actually, this downtrend, it depends. Probably should lower this to the bottom of that. So we have, oops, I'm gonna lower this one. Kind of a channel here. It's bounced up off of it. At some point, it will bounce and continue to go, up. But so we're at this 200 week on a lot of these, and we've bounced off it. But like you can see the downtrend and the momentum. So that's the kind of the indices. So what I do from there is I go to my sector ETFs, and there's a couple of ways a few ways I use these. One is to use a scan. So I have all these US sectors, but I've actually filtered them to the ones that I kind of want to focus on mostly. Like there's a ton of low volume ETFs and all sorts of things, bond ones and things that I wasn't really interested in. So I've sort of created my own list over time that I use to scan. So if you want ones that are above the volatility stop and price history more than $5, the slope of momentum is upward. Some of these you could avoid. You could have different scans without being as strict. And if I want the price above the 50-day moving average, so what I get here is KWEB and EMQQ. Those are Asian stocks. And you can see how what I was talking about in the other videos, we have this huge downtrend and below the 50 for the most part, but down this, and then we broke the downtrend. And we have rising bottoms already, so you could jump in right there or when it gets above the 50. But if you want to wait for a higher low after the break of the downtrend, then you have this situation. So what I do with TC2000, I put an arrow, and sometimes for learning experiences to go back and say, I should have bought back here or whatever if I didn't. The other thing, while I mentioned TC2000, you get a free trial or $25 off your purchase of a subscription in the link below, using my link in the description below the video. I've got the gold plan and I use real-time US data. And this, so there's a lot of drawing tools over here. The other thing I look at is the price percent oscillator. So you can notice that when it's below zero, the momentum is pretty low. So once you get above zero with either the price percent oscillator, or you could wait for the moving average, is usually a good sign. And then so when you break up the 50, you're going to probably head to the 200, and then you want to see that break and get above the 50 to get above the 200. And so we're now above the zero line for momentum as well. The other thing is perking up a little bit is electric vehicles and solar panels. So you can see that there's like a trend. It depends where you draw it, but we broke this trend and it didn't quite make it. It didn't really get above the 50. But you could draw a line like this. The trend lines flatten out over time. So it's steeper. It comes up. It doesn't quite break. See right here, the moving average didn't quite. So some people buy right when this moves above zero, but the momentum, the moving average didn't quite get there and it rolled over again. So, but we're breaking above that recent downtrend. And now we're above zero with the momentum. So we broke up above the 50, pulled back, and now we're heading up. So this one looks pretty good. If you look at the weekly chart, obviously it's bounced off the 200 and it's looking pretty decent. Similarly, TAN, it's just stuck below its 50-day or 50-week. If I go back to the weekly, we're kind of consolidating. We hit off the 200 a couple times. So, it's kind of, this one's a little bit stuck, but the other one that's poking out a bit is the biotech. It's still in a downtrend, but it's been perking up a little bit. There's one called XBI. It's not the greatest, still in a downtrend, but we're getting up. We hit above the zero line here and there, but we've done it a bunch of times and we always get stuck. These ones we get stuck at the 200, and we got stuck at the 50. This one got a little bit above the 50. The other thing, if I turn off the scan, the other thing I do, I look at recent momentum or recent gains, like record gains, and then 30-day, 90-day. So if we look at 5-day, you can see, just for stuff to see what's poking out. So you had the cloud services. The tech has barely bounced back, ARC, from being kind of a double bottom here. Let me just draw a flat line. If you hold the shift down, you can get a flat horizontal line like that. But, we're still below the zero momentum line. If we go to weekly, there's a flat period here, but, we still have the red volatility stops, but, it's curling around, about to cross down here, but it's way down low on the momentum. So it's kind of the bottom feeders type people, and, buying a really low price, and that's potentially something that can be done if you want to just put a little bit in there. It's not a trading chart perspective, but the daily doesn't look bad because it's like, we're in this big, huge downtrend, so it's got a lot of downward momentum within interest rates increasing, which is not great for tech stocks, but we're just breaking above this 50, so we need to see the 50 sloping up and getting this momentum above zero. So using my chart here, what I did, I'll show you the formula with TC2000, is I say the close, which is today, or the last closing day, minus the closing day 5 days ago, in brackets, divided by the close, the current close. That's the percent times 100. So that's the percent gain in the last 5 days. Similarly, 90, 30, and 90. So once you look at so you have the ARC stuff, you have a little bit of crypto, not very much, but it's, it's been poking up a little bit. Online retail, which is interesting. Germ, which is the the biotech stuff. So then I go to the 30-day, and I'll sort by that, and that's where you see the Asian KWAB again, and TAN, and the tech, ARC, cars. So nothing much different. Lithium. So like that's kind of related to what I said with the cars or the EV stuff, potentially. We have higher lows established here. And we've sort of broke out, came back down, but then we broke up again. But, we're stuck a little bit below the 200, between the 50 and the 200-day moving average. Battery, iClean, those are, the EV, alternative energy type stuff. If you wanted to, you can also look at inverse ETFs, which recently aren't doing great because of the little rally, but if you look at a little longer term, 90-day, you got Bitcoin inverse, you got cannabis, marijuana. Like you said, there's a rally now, but if you get a chance to get in, like if you look at energy, there's this big pullback. It broke it down. It broke an uptrend, sort of a steeper uptrend, but longer term, I'll just go to the weekly. See how steep it was? When it gets steep, it tends to flatten out. So it's pretty steep now. It's breaking down. So if it ends up staying, which is around the 50-day or 50-week, it might pull back to this trend line, and then you could potentially get in again. So some of the stuff that got beat down, if you think that the energy costs, oil will go up again because of lack of exploration and, wars and things like that, inflation. So you do have like inverse of the indices. We've pulled back to the 50-day, so there might be a bounce off of that with a continuing uptrend in NASDAQ and the S&P 500, stuff like that. So it's quite up and down. So obviously it's, kind of not a great time with the volatility, but okay, that's it for today. Hopefully you enjoy these types of videos where I talk about the trends and stuff. And if you want to pick up TC2000, which I use, check out the link in the description below. It helps out my channel, and like, subscribe, share this videos with your friends and on social media. It'd be helping me out. Thank you so much. See you in the next video.